And so that's why we like to trade the trend. And one of the things that we look for in pre-existing market conditions is about 15 to 30 minutes before the announcement, I want to identify, and this is usually on a 15-minute chart, I want to identify lower highs, lower lows for a downtrend, higher highs and higher lows for an uptrend. And then when we see those come together, I set my order. And I place the order in the direction of the trend, identifying trend resistance for a downtrend or support if there's an uptrend. Identify the most recent stop area or the area above resistance, giving myself enough room to be right, knowing that oftentimes an announcement has some volatility, and then we simply take the trade in the direction of the trend, adjusting the stop as we go down, as we get lower highs and lower lows. Probably the most direct approach to trading the news. And I'm going to show you a number of examples here momentarily. But that is a very concise, clean way going in ahead of the announcement that I can identify a trend, I can use the charts, and I'm going to trade with the smart money. I'm going to trade with the big money. I'm going to trade with the big banks, and they will always be trading their expectations of the announcement. Now, on occasion, however, you'll see things not move. You'll see things consolidate, and they won't be going up, they won't be going down. And that's the time that we look for the opportunity for the breakout trade, and that's what I look for, is a breakout trade opportunity. And the way I look at the uncertain times is that they are reading the news. There's more than one component. I mean, we're talking about macroeconomics for crying out loud. But when we're looking at the macroeconomics of the upcoming event, they're saying, okay, this will have an impact, but I don't know how much. Over the last 5 or 6 days, I would argue that we have a lot of uncertainty. The last 5 or 6 days of the major pairs have traded in very, very tight ranges. Now, on the daily view, I think you could trade the bracket or the breakout trade, identifying support and resistance. But on the shorter time frame, we have a very similar setup. About 15 to 30 minutes before an announcement, I want to identify a range. If I know that the lows or the support areas are being consistent and the highs are being consistent, I'm going to identify the highs, the lows, and place a bracket around it, a channel around it. Or if you're a price pattern trader, we're looking for a rectangle. We're looking for a rectangle that's lasted probably 3 or 4 hours worth of time on a 15-minute chart, where we can identify 2 to 3 touches of resistance, 2 to 3 touches of support, where there really isn't a bias up or down. After that is set up, when we see that announcement set up, we're going to measure the distance or the size of the range, so the low and the high, the distance between the two. After identifying that, we're going to place an order 10% above the resistance, a sell order 10% below the support, so we have orders buy stops above, sell stops below, with our stop losses 30% below resistance for the buy or 30% above support for the sell. What we're doing in that situation, by identifying the range, by measuring that out, theoretically, as long as we get the fill, we are risking 40% of the range and going for 90% of the range. It's giving us a better than a 2-to-1 reward risk ratio every single time that we set up this chart. Now, for those of you that maybe are new to trading or maybe that haven't done a lot of reward risk ratio analysis, a 2-to-1 reward risk ratio means that you only have to be right 1/3 of the time to break even. Now, if we're getting a 9-to-4 reward risk ratio, that implies that you only have to be right 4 out of every 13 times to be able to break even on these setups. Now, I would imagine that if it's going to break out 10% out of a range, that we should probably be able to see that type of a probability come together, that we might even be right half the time. What if we're right half the time? Well, we're right 50% of the time when we really only need to be right about 30% of the time. And that will generate profitability. Now, the last setup, before we get into the charts and show you some of these strategies and recent activities, the last strategy is to fade the trade. Have you ever noticed, have you ever been to Vegas, Atlantic City? Have you ever watched a roulette wheel? Has anyone seen that before? You've seen the roulette wheel, and the roulette wheels. What are the probabilities? What are the outcomes of a roulette wheel? When you think about a roulette wheel, your choices are: it can come up black, it can come up red, but then we have that green and that green zero and that double zero green, right? But the casinos certainly aren't dumb. They know how to make money. So what they do is they post the recent gains or the recent wins. They post what numbers and the colors up on a board. Why do they do that? They do that because they know that people will try to fade the table. With the roulette wheel, they know that if they show that the last 9 spins have been black, people will start betting on red. Does the roulette wheel care that the last 9 spins have been black? 10 spins that have been black? 15 spins that have been black? Does the roulette wheel or that little marble care? Absolutely not. The probability is still 50%.